recording. I want to thank everyone for joining us today. And I'll go over the members who are online right now, but we have Mr. David Piatek with the Federal Savings Bank. David is a vice president with that bank, and he's been doing webinars on emergency financial management during the COVID-19 crisis. David is also a Virginia National Guardsman. So he's one of us. On the line, we have right now, it looks like just board members. On the telephone, we have our board president, Mr. Dale Nelson. We have Mr. Ken Matthews on video, Mr. Peter Pereiro, Mr. Kevin Clanroot, our executive director, and Derek Trenton, our board member as well. So gentlemen, I'm going to turn it over to David and let him lead us through this training. If you have any questions, you can use the chat board and post your question in the chat.
Thank you, Scott, so much for inviting me to come talk with you guys and share some of this information about emergency financial management. What's different about what today's seminar is going to be is typically when we do budgeting or credit seminars, we talk normally how to prepare for an emergency or something that's unknown. Well, that event has already happened, and gaining insight into what's happening today is pretty confusing. There's a lot of information that's out there. Information is contradicting. You change the news channels and you hear different information. So today, what we're going to talk about is empowering you how to make the right decisions, who to contact, how to contact them, and what you should be asking them, because everybody's situation is unique to themselves. And this PowerPoint isn't going to give you all those answers, but it's going to point you in the right directions on what questions to ask and how to get a hold of those resources. So today's agenda is going to be, we're going to talk about what's happening today. We're going to be talking about debt relief and deferments for various types of credit that's out there that you might have. We're going to talk about understanding credit, budgeting. I'm going to go over an Excel sheet that I've created for budgeting. We're going to talk about how to get access to cash and reserves if it's an option for you. And we're going to be talking about credit, which normally we talk about how not to spend money or not to take out credit. But today we're going to be talking about how to obtain credit if you need it, just because you might be affected by the whole COVID situation with potentially loss of income or temporary unemployment. So today's environment, coronavirus, the COVID-19 is affecting everybody. It's affecting income, employment stability, the overall financial stability of folks, because I know a lot of people where at least one person in the household has lost their employment, or even potentially two, especially if they've been in the service industry, or if you look at areas like in Orlando where it's heavily focused on entertainment and dining. Now all that's been closed down, so income is affected. But then what do you do to help mitigate and protect your credit? It takes a lifetime to build credit, but it takes one missed payment to entirely screw up your credit score, right? And then that affects you long term when you're trying to take out credit. And this is something that, at least from how I feel, is it's going to have an endpoint, right? This isn't going to continue forever. It's a little bit different than 2008, 2009, which was really led by a housing crisis of values being over what they're supposed to be, and then people being upside down on them. Right now, it's a controlled stop to the economy, which hopefully in the next couple of months is going to kickstart back up again. But you don't want to take a temporary solution and make it a permanent problem. And so those are some of the stuff we're going to be going over today. We're going to talk about how to protect your credit through credit stability. And if you're facing any type of unemployment, or you feel like there might be a potential for unemployment, make sure you do the research ahead of time on how to file your unemployment, understanding how much you could potentially get in unemployment. And the requirements are constantly changing as they're putting different stimulus packages out. Your state and government, or state and federal, again, those are constantly changing. what I advise you to do is always go to the actual state or county's website. The example I have here is for Illinois. They have an entire section dedicated just to unemployment and COVID-19. What makes this COVID situation unique in itself as well is they've opened up the type of unemployment that people could qualify for. So before, if you were a 1099 employee, or let's say in real estate where you're commission only, those people were exempt from being able to get unemployment. But that has since changed with this situation, and they are now eligible. But to determine how much you can get, really you need to focus on your situation and contact the state to figure out exactly what you can do. The things that you can do that are in your control is to immediately budget. And my thing is micromanaging your budget is critical no matter what, but especially in times like this. Not everybody loves to manage their money because it's not fun. But when you get a control of your budget, then you're able to do different things, save money, save for things like this, or adjust your spending habits because you have to because of loss of income. Or if you have loss of income, but then you get unemployment, it most likely won't cover what you were making before. So you, again, don't want to put a temporary situation to be a permanent damage on your credit, the amount of credit you take out, and have an effect on your credit score, because it's hard to recover from those things. I'm always a big fan of planning all aspects of life, including, especially with today, using a calendar and managing your meals, activities, because everyone is staying home 7 days a week. So just managing all that along with budgeting is pretty important. Some of the different debt relief programs that are out there. The first one we're going to be focusing on is going to be mortgage debt relief. Now, when we talk about that, it's where you have the ability to defer your mortgage payment because you're in some type of financial stress or distress. If you're loss of income, your financial picture changes, you're not receiving income, you want to be able to see what options you have to defer mortgage payments. The first thing you always want to do is go to the company that is servicing your mortgage. So example, if you're making your payments to Navy Federal or to Chase Bank, Caliber, Freedom, whatever the case may be, review their policy online, because majority of lenders, everybody at this point has the policy online. Some of them will require you to call them, but some of them you'll be able to defer your payments online. Now, there's no deferred timeline as of right now. Everybody's doing things differently. For example, I know Navy Federal is letting people defer their mortgage payment by 3 months, and they're taking those 3 months and tacking them on to the end of the mortgage. Or they might take them and redisperse some of the 3 months into just increased mortgage payments after the 3 months is up. Now, other folks, I just read online right now, like Chase and Caliber, they're deferring your mortgage payments by up to 3 months, but then those 3 months of mortgage payments will be due in its entirety at the end of that 3 months, which kind of defeats the point if you think about it. Why would they offer you some type of relief for a couple months and then tell you that all that money is due? It's not exactly how things work, but they're going to be changing these policies as they implement them just to see what real effects are out there. So just make sure you're just double checking those online documents as you go through this. There's always new stimulus. The stimulus package is always constantly being updated. Some of them haven't been finalized. Some parts have, like the additional checks that everybody's getting, which should have already started as the beginning of this month. So if you are within that income bracket that you will be receiving them, just please double check your mail, and then also check your account if you get direct deposit. The other thing we talk about is rent. If you're having any type of difficulty making your rental payment, it's always better to be ahead of the curve and contact your landlord, not just miss payments and not let anybody know, because you could potentially put yourself in a bind where you try to rent the next time or the following year, and your landlord puts you that you didn't make your payments, and that could look pretty bad. Again, contact your property manager. If you're on the other side of this coin, if you're a landlord or landlord, reach out to your tenants and see how they're doing, see if they're fine. Because if you don't have enough reserves, you might be the one not making the mortgage payment, even though it's an investment property, and you might be you might be having to make these calls to the mortgage company to get some relief. Again, go over all the local options. Some places, and again, I'm using an example like Chicago, they're offering some type of rental assistance program to landlords, but who knows how fast they move. It's just like the VA. They move at a very slow pace, and majority of people have real bills due on the first of the month. All mortgage payments for April are going to be due tomorrow. So again, you want to be calling ahead as soon as you find out that you're not going to be able to make payments on things. It just protects your credit. Because if they could do some type of deferment and you're not getting penalized on your credit report, that's an ideal situation to be in. Otherwise, you're going to just be late on your mortgage payment, and that's just going to start tacking up on your credit report and start driving your credit down, which then limits your options on what you can do as far as financing. Student loans right now have it pretty good. They have zero interest for at least 60 days. Now, you still have to make your payment. All they're doing with that is they're taking all your payment that you're making and applying it as principal. Now, if you want to defer your payments, an emergency forbearance, you can do that for at least 60 days right now. You can go to myfedloan.org and be able to do it right online. So like the student loans, installment loans, and credit cards, they have a little bit more automated system because they just wouldn't be able to handle the volume of people calling. So you're able to click through it online. Make sure you do your research, and again, read everything and document everything. Take screenshots of your of the documents you're signing, and make sure you have a copy of them, just in case later on they count that as a late and they weren't supposed to. You don't want to be in the position again where your credit is taking a big hit. Installment loans, including cars, personal loans, and boats. Again, we're going to refer you to the online policy. Some of the folks have an automated deferment. You can call the servicer. This is my example. I have Ally Financial, Ally Card Note, and they give me an option of 120 days without any late charges. But the key to this is that there will still be finance charges accrued on your payment. So you said, because that can get racked up pretty fast. And 120 days is a decent time frame. You're talking about 4 months of deferred payments. But that could add on an additional couple $100 or $1,000, a couple $1,000 of interest to your mortgage balance. So not your mortgage balance, your car balance. Just be careful of that and read the fine print. Example for Ally with this company, when you go in to make a deferment, or you at least look at the options, they really don't give you too much of how that interest is accrued or where that interest is put, either at the end of the loan, or you might have to make a one-time lump payment. They don't really specify, so it'd be smart to call. Credit card payments, again, you're going to be reviewing the online policy for your specific provider. And also, depending when you took the credit out, I'm sure it's going to have an effect. And you could always apply for any type of debt relief or skipping payments. Now, what I've also seen with credit card companies is they're allowing people to go into payment plans on certain items that have been purchased over a certain dollar amount. An example of that is that, let's say you had to go out and spend $1,000 because you needed a new computer for your kids because now they're staying at home and the state didn't, or the schools didn't provide any computers, and you had to get one. Well, typically you'd be paying interest on that of 26, 28, 30%, and you really would go nowhere, and it would take you forever to pay that off. But what I've seen companies do is they've been offering 9-month installment loans on those type of items over $500. But again, check with and then you're not really paying much interest. It might be 7-8% interest on that. So on $1,000, you may be paying like $40 a month. So just kind of know what those options are. And again, if you have a budget, you know exactly what you need to do. And having the budget will allow you to understand what type of deferments you need to get if you need them. Because if you're overspending in certain categories where you shouldn't be overspending, those things can be easily mitigated and you would be able to make your payments. So you're not taking, again, a temporary solution and making it a permanent problem. If you miss your payments and don't contact the creditors well in advance, like example, if tomorrow the mortgage payments are due and you called today, you're most likely incurring some type of fee because they won't be able to turn it around that fast. Negative information, you miss one credit card payment, installment loan, that credit card payment, mortgage payment, that lasts on your credit report for 7 years. Now, if you have a late on your mortgage, after about 2 years, it doesn't have a bearing on your credit report anymore. But what it does have a bearing on is the approval chances for getting new credit. It's ironic that if you have really good credit, you have 0% interest rates, you don't get penalized with fees, there's no annual membership fees. But if you have bad credit, you get hit with insanely large interest rates, high fees, because you're categorized as high risk. So it doesn't make a difference what income bracket you're in. I have people, it doesn't make a difference, but the scale varies. So with good credit, you could change your life, right? You can get student loans, you can go to school, you can put yourself in a better financial position. You're able to apply for jobs that require security clearances, whatever the case may be. You always want to maintain your credit, especially if you're still in the military where security clearances are required. Maintaining good credit. So we kind of talked about this. Make sure you have a checking savings account. Obtaining several credit cards. That's really personal. If you're just starting off building credit, you can easily tag on to potentially like a parent's credit card, just so you get all that credit history just by being added as an authorized user. Knowing your limits is important because you never want to go over 30% of the available balance of the available credit as a balance. An example of that is if you have $100,000 credit card. If you have a $1,000 credit card, you don't want to be over a $300 balance on that credit card at any given time, because that will have a negative impact on your credit. Obtaining new credit. So again, this goes along with budgeting and making sure you're making your payments on time and keeping a low credit balance. The other portion is reviewing the interest rate and fees carefully. There are plenty of credit cards out there right now that offer great points if you pay all your bills off, and they also offer 0% interest rates. And again, that's normally towards your highest credit scores. Obtaining a credit card, don't apply for too many credit cards because it is a red flag. And then the other portion with that is knowing your limits is also important, because you might start off today and have a 780 credit score, and you might have 2 credit cards. But you are put in a financial jam. You apply for a couple of credit cards and max out your credit cards because you need to do that. Or you might have a feeling you do have to do that, but you don't have a budget set up. So you really don't know what you're spending money on. A 780 credit score, let's just say that 4 credit cards at $3,000 a piece in limit. If you were to max those credit cards out, your credit score could drop 160 points in the snap of a finger. So what happens is people put themselves in this like, hey, I'm going to use the card just because I need to, or hey, I'm going to use it because I'm not going to spend much, or hey, I'm going to spend money on it, but I'm going to pay it off every month. They let that lapse. And what happens is when those interest rates go from 0% APR to 30% APR, they're locked into those credit cards because their credit scores have taken a large hit because of how they've leveraged credit. And then you're just stuck in that for a long time. Check your credit scores like Equifax, Experian, and TransUnion. You get a free credit report annually, but you can also use credit monitoring, which is relatively easy and free if you use places like Credit Karma. They'll give you updates on what's happening with your credit, if your balances are increasing. But just always be reviewing that and at least checking that once a week just to make sure that everything is good with your credit. And I just talked about Credit Karma. After you sign up for a Credit Karma, it gives you credit card options. It gives you different types of bank accounts. Your bank accounts also give you access to your credit. Like if you have Navy Federal, USAA, Bank of America, Chase, they all have their credit reporting scores that are on there. What lenders look at, they look at your FICO credit score. Credit scores vary. If you guys saw up top, there's a Vantage score versus a FICO score. A FICO score is something that's about 20 plus years old. And our Vantage score is something that was created by the 3 credit bureaus to come up with a new scoring model to offset the old FICO score. But regardless, different companies use different scores. The credit scores could vary widely. If you're looking to buy a house, then your FICO score is the one you would be looking at. And to the note up top, when we talked about Experian, TransUnion, and Equifax, their credit scores are sometimes very slightly different, and sometimes there's huge variations in them. And the reason something like that might happen, give you an example, I'm helping a gentleman out right now to refinance his home, but there was a bankruptcy from somebody else because they have the same name that got tagged onto their credit report, and he hasn't been able to get it off. Well, we have a way to get those things off on people's credit, so we're able to help them out. But like those things that come up, you want to fix those things because they will have huge effects on what you can borrow, and again, the terms of what you borrow. Stability when lenders, so this is just kind of more of like, hey, if you guys are thinking still even during a time like this, buying a place or refinancing your home, which if you do own a home, rates are at record low right now. So you probably you might want to consider it if you're in the 4% or higher interest rate. Determining stability is normally by employment history, income, how long you lived at your current place, do you own any other properties, and how you maintain your checking and savings account. Obviously, how you manage your money has an effect on buying a property because it just shows that you have the ability to make all your payments on time. Question for you guys is, if you miss one payment, how much does your credit score drop? Give you guys time to think about it. A little drum roll. And on average, it's 70 points for one payment being missed. And that's why I talk about it takes a lifetime to build credit, but just one event for it to entirely not fall apart, because with time, it will come back. But again, it does have negative impacts on your credit. Late payments, like I said, we've talked about it a couple times. It's the last thing you want to do if you can avoid it. And that's why, again, you have to contact your creditors. If you are having some type of problems with your payments, to contact them well in advance of the due date, because they are inundated with people calling and getting payments deferred. Now, when we talk about budgets, there are two types of, there's two. Is your fixed expenses, like this is what my car payment is. This is what my installment debt is. I have childcare services like babysitting service or any type of monthly expense that you know exactly what the cost is going to be. Then you have your variable expenses. Now, variable expenses can be shifted to fixed expenses. And I'll give you an example of a couple of them. Heating, gas, electric. You know what your range is, right? You know, hey, and the least amount I spend is this, the most amount I spend is blank. I normally will, and not normally, I take my highest monthly bill for a utility and make that a fixed expense at the highest amount. So then I just know no matter what, this is what it's going to be. Same thing for food. You can budget how much you spend on food, so you can put that in a fixed expense so you know how much you're spending. Other things like medical, clothes, emergency, car breaks down, car needs to be fixed. Yes, you can't budget for those, but those are really going to be more towards your savings. But you can't budget for those because those are going to come out of nowhere. So that's more of like an emergency budget. But your variable expenses, you just need to keep track of those. And everyone does things differently. I use 2 different credit cards. One I use for like, hey, these are all my fixed expenses. And I use another card for any type of things that are going to be outside my budget that I want to purchase, like going out, grabbing up, not anymore. You can't go out and grab anything to eat anymore. But that's why I normally split it up so I can see how my spending patterns are. And I update my budget on a daily basis. Determine your net take home, not what your gross is. Someone might say, hey, I make $60,000 a year. That's great, but you really need to know how much you take home. Because if your gross pay per month is $5,000, you're not taking home $5,000. You're most likely taking about $36,000 to $4,000, depending if you have insurance being taken out or different things like that. So make sure you cut it down to what your actual take home is, and and then if you're contributing to 401ks, that's another factor. During times like this, sometimes people do stop contributing just to get some extra money. But again, these are all personal decisions you need to make, and they all come with consequences, which we'll kind of go over as we go through this. 3, once you've computed all your income, you want to lay out all your expenses to your fixed and variable expenses, and then save for unexpected events. Now, today we are in one of those situations where it came out of nowhere, so we have to kind of deal with what we have. Step 4 is prioritize your payments. You know what you need to do: shelter, food, necessities. Normally it's in that order. It's always shelter, then food, then any type of additional necessities. And then just making sure you check your spending limits. You're not on Amazon every day ordering packages to be coming in, because that can get out of hand pretty fast. And just avoiding any impulse buying, really identifying wants versus needs, especially at times like this. Entertainment, you know, when you go to when you could go to a store like a Best Buy, you would see that all the PlayStations were bought up, whatever the case may be. So you just want to just be careful how you're spending your money, and is it the best use when you might have other things that you might need. What I'm going to show you guys next is going to be a sample budget that I put together. It's a pretty simple one. There's plenty of apps that are out there that you can use. And for some people, they like it. I don't. And the reason is it's too easy. I like doing it within an Excel sheet because it's manual and it's painful, and you have to actually look at what you spend money on. What I've learned with these apps is they always show you the circle of, oh, this is all the money that you spend. This is where you spend it. It's not the same when you have to manually go into your checking account, each bank account, and just see exactly what is happening with your spending habits. So to give you guys an example, let me just get this spotlight. All right, here, perfect. So what I start off is in the top left. So if you have a couple, you put your names in, you put your gross income and your net income. So then you actually know what you're netting. Next thing you put is any type of liabilities that you have, right? So, hey, I already have current credit cards. These is what they are, what the balance is, what my payments are. I have a payment date in here, your available credit, and your total credit. Because if you use any credit, it will take away from your available credit based on your total. It'll tell you what your ratio is. Again, you want to be 30% or less. It also outlines what your APR is. You need to know what your fees are, because if sometimes you have to make a bigger purchase, you could always slap it onto a 0% interest credit card, but make sure you're paying that card off and not just deferring and not making extra payments. Because again, at the end of the day, you're going to get caught up in a situation where you're not able to then make those payments once they become fully amortized. On normal bills, that's like, hey, student loans, car payment, You have your rent or mortgage payment. You go to the gym, not anymore. Any type of utilities, storage, and then groceries is set as a fixed expense. So you know what your total monthly expenses are. And if you have outstanding liabilities, it just kind of gives you a nice reality check that you owe money and you need to be focusing on paying that money off versus spending it on other things that you might not need. The number 3 here represents the number of reserves you would like to have. Now, I didn't put reserves up here, but I mean, you just put 3 and then it says, hey, in order to have 3 months of be able to go through life for 3 months without making any money, how much money do we need to have saved up? In the upper right-hand side, we talk about assets, current assets. You know, if you have a Bank of America Chase account, any type of retirement accounts, you can put all that in here. So you're just tracking that. And then you'll understand what your net income is minus your expenses is what you have left over. And 20, like in this example, is 2920, and that's money you could use, you would be putting towards your savings account. Now, having a budget is pretty simple, but a lot of people don't do it and they don't know where they spend their money. Budgeting is like having a business. A good business understands where all their money goes. Successful businesses, because they know what they're putting out, what they're putting in, what they can cut down on costs. You can shift where you spend your money. You could do more money making activities like, hey, during this time, should I be going back to school? Can I work full time and do school part time? These things are questions that people are facing to see what you should be spending your money on or how to make extra money. So I'll send that out to you guys so you'll have that as well. When we talk about cash versus reserves, cash reserves, liquid versus retirement. Your liquid accounts is your checking, savings, money in the mattress. Your retirement is your 401k, Roth IRA, the IRA and TSP accounts. Now, before we go into this, the disclaimer I have on this is that you never want to make any type of financial decisions, especially with retirement accounts, unless you talk with a financial advisor. And this is really more designed like in an absolute emergency kind of advice. If things are melting, like you're just going to be able to lose your house, your credit's going to go kaput. What options do you have to minimize the impact of what's happening around you and minimize the long-term effects of your decisions today? So you can pull money out of retirement accounts, and there's different ways to do it. You can pull money due to hardship or if you're buying a home, but you have to know the consequences because they could be severe, including large tax penalties. You might take out $100,000, but you might be taxed $20,000 on that money, and you spent that money. Now you can get a lien on your property. There's other ways to do it, but again, this is why you always talk with a financial advisor about this. There's ways to borrow against your money, because if today, let's say you had a retirement account of $200,000, and today that's worth $100,000 because of everything that's happened in the markets. What some people do is they pull that money out. But why would you pull that money out? Let's say you needed $25,000 or let's say $30,000. You came up with your budget and you said, hey, in order for us to get through the next 6 months, we need $30,000 in cash and we're going to use it just for making our bills and payments and just live minimal. If you pull $30,000 out today, it's like pulling $60,000 out because you had a loss in value. During the 2008-2009 crisis, what happened is people did pull money out, and all those stocks, they all come back. It's the same story about every 10 years. It's just Groundhog Day. People panic, they pull money out, they lose all the money that they had in there, they get penalties on this money, and then within the next couple of years, markets fully recover, and they would have made 4 or 5 times more money if they would have just kept it in. But you're also able to take out loans against your 401k, so your money actually stays in there, and you're not getting hit with penalties. So, but again, take it with a grain of salt. Consult with your financial advisor to get that information. Your ideal savings in general is 3 to 6 months of reserves. That's how typically long it takes for someone to find a new job. But in today's environment, it's something more along the lines of stability and what's happening with employers. If you own a home, you potentially can get a home equity line of credit where you can borrow against your house. You can do a cash out refinance. And if you own a home, and again, if you're over 4% interest rate, you could definitely get that much lower, skip 2 months of payments, and save money that way. And then also save on your monthly expenses, which helps you with your budget. Opening new credit, just really understanding how to apply for it. Just the first thing, always be responsible. There's real life consequences that of being overextended and you can't get out of. Again, the example is a classic one, as I see it all the time. People get one of these, they have good credit. They get some of these 0% interest credit cards. They're good for like 12 months to 18 months. They just end up racking because they're like, oh, my payments are so small on this credit card. Well, yeah, because it's at 0% and you're making a 1% payment. So on $10,000, you pay $100 a month. So people are excited about that. But what happens is once that credit, they've maxed out their credit cards, that rate's at 30% APR. Now your payment's $500-$600 a month. And that's just an interest. So you never get out of that situation. So again, don't let these times today put you in a worse off situation than you were before. We talked about the credit. You might not be able to pay off your debt. That's very real for a lot of people. Opening credit cards can relieve immediate needs. For some folks that are living, a lot of Americans are living paycheck to paycheck, but you should be even more careful opening credit with that type of situation because it's hard to get out of. Research your credit cards using like Credit Karma. If you have a cosigner or like you have let's say a spouse or you have a kid, you can always place limits on those cards and how much they could spend. Just an FYI. So if you add a kid onto an account, you can always set the budget at $100 a month. So that way they don't get out of control. A lot of all companies offer 0% interest credit cards. And when you should be doing this is something you really need to just understand your budget. And you're doing these things when it's not too late. Again, it's like deferring payments. You don't want to put yourself in a spot that in 2 days, I need to buy baby formula. We have no money. I need to apply for credit. Well, if you miss some of your other payments, your credit score is already taken a big shot. No one's going to approve you for it versus taking the proactive approach with budgeting and understanding where you are financially will help you understand that battle space. Hey, let's apply for some cards because we might need them before it's too late. Let me call the credit card company, car company, the mortgage company. Let me talk to the landlord and just let them know what's happening. Yeah, you might get an argument maybe with your landlord and say, well, you have to pay. Well, it is what it is. You got to figure out what's the most important thing for you and your family. But being prepared sets you up for success. And then you'll be able to control it and then control your spending. But again, if you don't micro budget and take the initiative, nothing is going to happen. Always apply directly with the card holders. If you don't know if you qualify or not for a card, I always recommend just you going to it. They have a bunch of, you can get pre-qualified. They don't take a look at your credit report. They do like a soft credit inquiry. So that way you at least know you're going to get approved or not instead of wasting your time and getting credit inquiries in your credit report. So do you guys have any questions? I think we're all good, Scott.
Wow. Okay. That was fantastic, Dave. We really appreciate that and your insight. I know we've been pushing out some message traffic with the auto insurance companies that are giving rebates of 20-25%, USAA, Allstate, and places like that. I think the main concern is now for the individuals that we do have in our membership who, may have been living paycheck to paycheck, and now there's a a family member or a spouse who was contributing to the household income, who has now lost that income, what do they do? What type of relief can they look for? And I think you covered that a lot in looking online and looking for the unique programs and policies associated with whatever lender you're using.
Yeah, and that's the hard part, is that every day they're changing. But what I really try to drive home with the seminar too is really, if you need to know your budget and prioritize your payments. Because if you don't know your budget, you don't know what you need to cut back on.
That's great. And this is emergency financial management, and we're certainly going to circle back around with you and do some of that tiered training for our membership, starting with the basic budget and how to build that budget and spend a little bit more time on that, and then go into savings and reserve accounts and what should reserve accounts consist of. If I'm a renter, do I really need to worry about replacing a water heater? Whereas if I'm a homeowner, yes, I do. What's the warranty on my roof? If I'm going to have to replace a $10,000 roof in the next 5 years, I need to start saving for that now in a reserve account.
Right. And that's, so when we do our regular financial classes, the messaging is very different, right? We focus more on how to save, not open up new credit, and then contribute to 401k. And then to your point, like, hey, how do I place some of these things in to help mitigate some of these large expenses that will be coming up?
Super. Mr. Clandrew, Kevin has a question.
I did have a question. If we find out, it sounds like really the number one thing to do is to work with or contact your lending institution if you have payments due. Is that in general, that's probably the correct answer, don't you think?
Yeah, it definitely is, especially with your mortgage, because you might go through a questionnaire online, but then you will have to give them a call to go through it. And what's frustrating is, like I mentioned before, some companies are letting you defer it for 3 months, but then after 3 months, that entire amount is due.
Yeah, why?
That defeats the point. It's beyond frustrating for when people are telling me that, hey, we do have an option, but you're going to be in a worse off position at the end of those 3 months. But some of these companies are saying, and this is also crazy to me, it's like, well, don't worry about it. They'll have something else figured out by when that 3 months is up, and then you might be able to put in a different program. But that doesn't give you any type of assurance that, hey, after 3 months, what are they going to do? So if you can make your payments, make your payments. If you can't make your payments, at least protect your credit in the meantime for as long as you can, right? I mean, that's the only thing that you can do.
Yeah. Yep. Thanks.
Yeah, of course.
So I guess another scenario would be, there are a lot of households who were dual income households, and they were using their credit, to make purchases during a normal situation, before this crisis. And let's say they racked up some credit card debt because they knew over time that they could manage that debt and pay it down. And now they're faced with a crisis situation where they may be having less household income coming in, and now they've got this credit card debt that they racked up. What's the thought process or the rationale, if they have good credit, to try to find something with a zero interest for 18 months to transfer those balances over to? And when they do that, should they close those other accounts?
That's a great question. So one, when you transfer balances, they might be 0%, but there's always a fee. And what I've seen is 5%. So there is a cost to doing it, but if you're in a financial situation where those payments become just too much, it is wise to transition to and move those accounts and pay that small fee, because you're paying way more in interest. So I do recommend that part, to move those accounts. The other part is, do not cancel out your old credit card, because as soon as you make that cancellation, you will have an adverse effect on your credit score. You want to keep your accounts open. You don't want to close out accounts that you've had for a while, because you lose all that credit.
Great point.
Yeah, because we've seen people do that, and they lost, like, I see somebody lose 60 points just on closing out a credit card they barely use. It's an Army buddy of mine. I was like, you should have called me before you did something like that. But yeah.
Great. Anyone else out there have any questions? If you want to ask Dave a question offline, he's posted his phone numbers and his email address. Feel free to Dave. I'm volunteering you, but feel free to reach out to Dave with.
Thank you. Yeah, the best way, Scott, is just to send me an email and just give me a brief description of what you're looking for, and then we can set up a time. So we'll make it pretty easy, but it's just easier to send me an email, schedule a time, and that way I could put the time in. I'm working 7 days a week, so I could always accommodate, even evenings, early mornings, or on the weekends. I'm around.
Super, and I appreciate you, volunteering your time and your services to provide this valuable training. But just so that the people who watch this online become more familiar with the services that your organization provides, what are some of the a la carte services, from mortgage lending to personal loans to veterans specific loans that the Federal Savings Bank offers?
Yeah, so I specialize in home loans, so people that are buying. Using VA loans, conventional or FHA doesn't really make a difference, but our bank is really designed to help folks buy and help them refinance with their homes. And then we do offer a service for personal loans, but it's only to military, like veterans and active duty folks. So that's pretty much like the two things that we focus on, not try to spread it out too much. That we get the greatest service to the folks.
Super. So again, just to go back and double tap the refinance situation with the current interest rates for the markets, you were saying for individuals with good, healthy credit, but they may have a mortgage interest rate over 4%.
Yep.
Now is a good time to refinance?
Yeah, no, it definitely is a good time to refinance, but just kind of like with my other like the other things that I mentioned, you always want to just be careful of fees. VA home loans are notorious for having high costs with a lot of your favorite banks that are military friendly, just because they charge discount points and 1% origination fees. But for the most part, like from our end, we charge a flat fee and no discount points. So I mean, give you a quick example. In general, like what I've seen lately, people, especially buying, the rates are in the high 2%. Like they're still super low. Same thing with refinancing. If you have a VA home loan, refinancing it into, another 30-year mortgage, but that all comes at a cost, right? Because if you've been paying your mortgage for some time, like great, you're going to save some money, but you're restarting your mortgage, right? So does that always make sense for people? And then just really understanding the cost of it, because if you're refinancing and saving, let's say $200 a month, and with the way a refinance works is typically we'll always set it up so you skip 2 months of payment, so all your costs are paid for. So you also have to be careful of that. Like you don't want to just spend all this money and then be like, oh, I'm going to save $100 a month, but I spent $6,000. Well, that's crazy. Like that's not worth doing it. Or the other thing is that we're going to sell in the next 2 years, but it's going to cost you more to refinance now than you would if you were just to hold off and make those payments on yourself. So I always look at it. It's all based on just, I look at it from a pure math side. If the numbers make sense, I'll tell you. If they don't, I'll also do that, because sometimes they just don't. Like for someone to save, like let's say example, like I mentioned, $100, but if it's under 100, it's hard to justify to do a refi when it's costing you some money to do.
Super. And there may also be some scenarios where someone has a 30-year note with 20 years left on it, and it may be more advantageous for them to drop down to a 15-year scenario, keep the mortgage payment the same, but knock off 5 years.
Yeah, no, I mean, that's a great point. With the rates being much lower, you're able to save a ton in interest. And just a side note with that, because right now we've had a lot of questions from my other seminars when I do my VA home loan seminars with like the USO. That's how we met. Right now, rates on purchases are all-time low. And when you think about the market itself, we've been very busy with military members buying properties, which is kind of odd because other markets, housing hasn't moved as much. And what we find is that right now, about this time of the year through the summertime, I don't know if you ever guys bought homes during the summertime. It's hard, right? There's a ton of competition that's out there. But again, you have to make sure it fits, like you're in a stable job, like all that stuff is aligned. But what we're finding is that people are getting a better opportunity to buy housing because not as many people are looking right now. And what I have a feeling is going to happen as soon as this is all over, there's going to be a lot of pent up demand for people to move, especially when people have been staying home for a long period of time right now. They just maybe realize they're like, you know what, maybe I don't like where I live anymore. You get that sense from people just talking to them late in like the last 2 weeks. It's kind of funny, but people do just realize that, you know what, maybe I don't like where I live, and we are in a good job position, and we want to kind of get ahead of the curve. Because again, what's happening today isn't driven by markets. It's not driven by housing crash, by a bubble. It's driven by a controlled shutdown. So it'll recover. It will just take some time. That's all.
Yeah. Gentlemen, anyone else on the line have any questions or comments before we end this session?
I don't, but thanks, Dave. Really
Thanks,
appreciate
guys. Of course. Thank you for coming on.
Yes, thank you, Dave.
Of course. All right. Thanks, guys. Well, it's good hanging out and talking. If anything comes up, give me a shout.
Will do. Thanks so much.
Okay.
Thank you.
Thanks, guys. I'll talk to you later.
Yep.
Bye.